Hello, I am Miyun from the Department of American Cuisine. Today is June 2nd, and let's start the American stock news. Today as well, I am Miyun, keeping you updated on the American stock investment trends without change. It's already June again. It's already the midpoint of 2025. The upcoming June, the June that is starting now, is a precious time when many of you can take a break from your busy lives and recharge. Since we're talking about productivity, there are a few things I'd like to share with you all. Recently, I've had a chance to explain the concept of leverage. In the United States and other advanced countries, people are actively using various types of leverage. So even on weekends, the broadcast doesn't stop. Last Saturday, together with Mr. Kim In-jung, we did a broadcast about NVIDIA, not just about NVIDIA itself, but about the hidden secrets behind NVIDIA's earnings, and the United States stock market's initial public offering education broadcast where you can learn about these secrets. And yesterday, there was another broadcast on Maison. So, we studied together on Maison podcast about the most difficult part of investing in the semiconductor industry, whether this industry really has competitiveness, and whether it can maintain it. The reason we can provide such diverse content is because we are using leverage through our collaboration with Choice Star. Another important part is that recently, through artificial intelligence that is closely related to our lives, we are also using different leverage. Recently, a lot of artificial intelligence applications have been coming out. I've joined about 7 or 8 of these memberships, and I'm trying them out like this. So, I'm working hard to keep up with the times, running a personal broadcast and maintaining a membership. There are also some parts I want to show you about the subscription services. If you look at the Seeking Alpha page, you'll see trending news. Right now, these are the news articles getting the most clicks, and the very first news is about the recent earnings report. In the past, you would come to Seeking Alpha like this and click on the news. There used to be a section where you had to interpret this, but if you look here, this article can be translated into Korean. If you want to read it, just click here, and a natural Korean sentence will appear like this. So if you click it, you can immediately read this article in Korean. In the United States, the dollar dropped amid worries of a potential May interest rate cut and the Trump administration's negative impact. Trade tensions between the United States and China intensified after President Trump accused China of violating agreements, resulting in a more uncertain outlook. China strongly denied these claims, and President Trump announced that he would double the tariff rate on $200 billion worth of Chinese goods to 25% starting Friday. So that's why this news is so important. A new feature has been added to the Shifting Alpha app that allows you to view subtitles directly in Korean. When I saw this, the first thing that came to my mind was this. As the leader of a value investing community, I worry that my content may be fueling some members' unhealthy obsession with value investing. I need to ensure I maintain a balanced perspective, lest I end up like those overly fixated value investors. I'm also worried that, due to the influence of artificial intelligence, the value of creators might disappear, and that this kind of situation could happen. That's why I'm worried too. In line with the rapidly changing times, I'm developing new content to support many people's investment activities. Recently, I've been trying to provide more value to many people through YouTube channels and also on membership platforms so that I can help as many people as possible with their investments. I'm receiving a lot of interest from many people. And since you can see news articles in Korean like this on the Shinsing Alpha, many people are able to access Shinsing Alpha more easily. If you wait just a little longer, I think it will get even better. From next week, Seeking Alpha will be offering a 20% discount event. So at that time, you can sign up for a premium membership at a more discounted price. So, for those of you who want to sign up for Seeking Alpha because you want to read Korean articles when this new feature is released, if you wait just a week or so, I'll share more detailed information with everyone so you can make a better decision. Okay, then let's start fresh with the first week of June with today's weekly news. Let's get started right away. This is the Monday broadcast. Today as well, let's take a look at the United States stock market trends from last week. Let's take a look at the S&P 500 chart first. I marked the period by week. Overall, it's colored green. So last week, there were more stocks that showed an upward trend than those that showed a downward trend. The tech stocks we pay attention to are also doing well. Most stocks are in the green, but if you look at the software sector, you'll see that there are quite a few stocks showing a downward trend. Among them, Cadence Design System, CDNS, saw its stock price drop by 9.34% in a single day. Previously, when there were this many stocks that fell sharply, it was very difficult to pinpoint the reason. But now, with the help of artificial intelligence tools, it seems like we can easily check and find out. This is the redesigned system page for Cadence. If you look at the article titles here, you can see that there are some that are a bit off or awkward. In this case, you can just click and immediately see the Korean translation. Okay, I'm here with you. If you follow the Financial Times, you'll find American companies in electronics, design, automation, as well as Cadence, design, and others. The system history was also delayed a lot. I recorded the sound of the explosion in the afternoon. And that's the reason being explained. The United States Department of Commerce announced that it would restrict the sale of semiconductor manufacturing equipment and software to China, which is another reason. Previously, only a few hardware items that made NVIDIA chips were affected by the restrictions. Recently, issues with China have spread to the software industry, and because of this news, many software companies did not perform well last week. It seems like that's the reason when you look at it this way. Next, I have organized the trends of major United States indexes for you. The index that rose the most among the major indexes last week was the Nasdaq. The Nasdaq 100 rose by 1.94%, the S&P 500 by 1.78%, and the Dow Jones by 1.57%, so all three major indexes recorded gains. And the performance of 11 sectors was also very strong, with only one sector in the negative and the remaining 10 sectors all showing gains. In particular, if you look at the top performers, real estate rose by 2.68%, making it the best performing sector. The second was financials and the third was technology, which rose by 1.81%, showing a strong upward trend. Now, if you look at the trends over the past month, energy stocks rose by 9.97% and utilities by nearly 10%, making them the best performing sectors. This shows that the trend is clear. Let's examine the performance of United States stocks last week. Several stocks surged significantly during the week. At the top, you can see Palantir. The stock price has been consistently rising over the past week. However, on Friday, it surged by 7.73%, so over the week it marked a rise of 6.87%. Broadcom Plus gained 5.84%, followed by Meta Plus at 3.2%, Nvidia Plus at 2.92%, Tesla Plus at 2.10%, Amazon Plus at 2.00%, Google Plus at 1.94%, Dell Trade Desk Plus at 1.80%, and Visa Plus at 1.52%. Costco Plus rose 1.14%. Taiwan Semiconductor Manufacturing Company 0.70%, AMD Plus 0.38%, and Talent Energy 0.36%. The remaining 6 stocks fell over the week, but MicroStrategy managed to record a weekly gain. Credit Technology was minus 1.33%, Bitcoin was minus 3.05%, Celestica was minus 3.42%, Uber was minus 4.09%, and the worst performer was B2 with minus 8.01%. However, these rankings can change completely if you look at them on a monthly basis. If you look at the stocks that performed the best over the past month, Credit Technology and Trade Desk both rose by more than 40%. Next Tracker rose by 39.6% and Celsius increased by 35%. So if you look at the stocks that performed poorly last week, you can see that over the past month, they actually showed very strong upward trends. On the first day of every month, I share the current status of the United States portfolio for United States members, and I also disclose the returns of the United States portfolio. And I also share the portfolio returns on the United States YouTube channel during the first broadcast of every month. But let me ask you again, why do I show the returns to so many people? The reason is so that many people can directly verify whether Ji-Hoon Mi's model portfolio investment strategy is actually working effectively. Usually, if the price goes up, people tend to buy stocks, and if the price goes down, they tend to sell stocks. This kind of behavior is actually very common. But if you look at the momentum strategy that I pursue, it's not like that. There can be times when you do the exact opposite. So, as I promised, over the past 2 years, I've tried to explain momentum investing in a way that's easier to understand. I've shared a lot of these concerns with you. Today, I thought I'd introduce momentum investing in a slightly different way on this broadcast. I think of the stock market as a place that opens and closes every day with a clear beginning and end, like a journey. For example, I don't know if you've ever been to a horse racing track, but when we compare the stock market to a horse race, it feels very similar. Many people go to the horse racing track. When information is shared in this manner, a clear pattern emerges. Some individual statements prove to be highly accurate, while others are less so, as evidenced by their track records. Now, this is a table that shows the odds for each horse. Industries are the same. Some industries have a high probability of winning, while others have weak fundamentals, so their chances of winning are significantly lower. So we usually analyze stocks like this and then bet a lot on the sectors that look the best. For example, when you hear names like NVIDIA or Tesla, these are the megatech companies that we admire, and they have strong fundamentals. However, this process has a pitfall. In a bull market, the cycle may repeat daily, and you might hear it could continue like this every day. In the stock market, rankings inevitably change over time, regardless of efforts to maintain them. If a horse wins once, or if it comes in last, it has to move down in the rankings like this. It either gets a slight handicap, or if not, it gets pushed down. This is called a penalty. So, in horse racing, when a horse wins, it gets a little more weight added, and when it loses, it gets some weight taken off. That's what we call a handicap. In this case, the burden is reduced. By making it a little fairer, it slightly lowers the chances of winning. That's why they apply this system in horse racing. Yesterday's winning industries, the ones that had a lot of demand, tend to get a bit heavier, so it's a little harder for them to rise again. On the other hand, the industries that lagged behind yesterday get a bit lighter, so it's a little easier for them to go up when the market rises. Now, if you understand it this way, the problem is if you slightly raise the weight or slightly lower the burden, the effect is actually very gradual. That's why it's usually like this. The stocks that won yesterday are still likely to perform well today. A slight weight increase doesn't necessarily mean the top-ranked horse will suddenly perform poorly. Even if it performed poorly yesterday, with only a small weight increase, it still has a good chance of performing well in today's race. In the stock market, stocks that performed well yesterday tend to continue performing well today, while those that lag behind are likely to continue underperforming for some time. So, if things keep going up like this, eventually there will come a moment when this weight is no longer bearable. If you keep adding weight endlessly, it eventually becomes too heavy. You start falling behind, going from first place to second, then third, and continue dropping in rank due to the excessive weight. This is what happens when our bodies become weakened like this. When I say momentum is weakening, I mean that even if a stock continues to reach new highs, if the momentum behind the rise is diminishing, it indicates the stock is losing strength. Until the momentum is completely gone, as long as this stock keeps rising strongly and the volume doesn't drop too much, you should keep investing because the possibility of it continuing to win is high. This is the principle of momentum investing. On the other hand, stocks that keep falling in price, even if you keep adding to your position, have a much lower chance of recovering to their original value. Therefore, when it keeps falling, betting on this stock is not a wise choice. There is a risk of loss, and that's why I'm telling you this. So this time I'm going to explain the basics of the United States stock market through some examples. Now, the most important thing is to take another look at how the momentum investment strategy, which is a very novel concept, actually works. I'll show you the investment performance of Min Portfolio, which I personally manage over the past 5 months. At the end of April, the amount in my portfolio was about 912 million won. After 1 month, this amount increased to 1.012 billion won. During that month, I did not make any additional deposits or withdrawals. If you do the math, the investment profit is 99.9 million won. In 1 month, I profited about 100 million won. That's how it appears. If you look at the monthly income, 10.95% and even up to 11% were achieved this time through Plus. That's how it looks. Next, let's look at the investment results over the past year. As shown in third quarter 2024, there was a 1% decrease, while in fourth quarter Plus achieved 35% growth, indicating a strong quarter. However, first quarter of this year showed little growth, minus 22.3%, and for the second quarter of 2025 so far, we've recorded a solid return of 16.04%. So, if we add up the actual results from the last 4 quarters, we've achieved a successful investment return of 26.09% over the past year. I think this kind of summary is possible. If you look here, I'm mainly comparing the indices. The S&P 500 went up by 11.89% over the past year. In the case of Nasdaq, it rose by 13.58% over the past 12 months. Compared to major indices, 26.09% is a very strong return. To summarize, personally, my goal is to achieve an average annual return of 20%, but the United States stock market goes up in some years and goes down in other years. Consistently achieving 20% returns yearly is not possible. So, you should keep benchmarking and at least try to match the performance of the S&P 500. This should be your main goal. So, in my case, if the S&P 500 goes up by 11.89%, I should aim for about 24%. That's how I set my goal. In that sense, a 26.09% return is a successful investment result. This is how I objectively evaluate my performance. Back in June 2020, when I first set up my United States YouTube channel, this is what I said during my very first broadcast. My goal is to achieve an annual average return of 20%. At that time, there were a lot of skeptical comments like, 20% is such a difficult target. Can you really achieve that? And isn't that too ambitious? Looking back now, I'm actually achieving that return. In 2022, the stock market experienced a huge loss. Despite that, I persevered and had positive returns in 2020 and 2021. In 2023, I achieved over 100% return, and in 2024, my returns are close to 70%. Over the past 12 months, the return is 26.09%, consistently outperforming the 20% benchmark. This demonstrates that my investment strategy is effective, and I believe such returns are objectively achievable. Right before this, I recorded an 11% return from the United States portfolio over a 5-month period. I made these investments myself, but honestly, the performance of the United States stock market was just so good. Last May, the S&P 500 rose by as much as 6.2%. Because of that, it recorded the highest May return since 1990. So, the important thing now is that May was really good, but what will happen in June, which is just starting, and what will happen in the coming months. There are articles about this everywhere, but today, instead of just reading those articles, I will directly share my personal opinions with you all. May was a very intriguing month for United States stock investors. Many who invest in United States stocks made significant profits. The S&P 500 recorded its highest monthly gain since 2023, and for us investors, it was the best May we've seen in 35 years. Especially the Nasdaq index that we love so much also did really well. In the short period since April 8th, which we recorded last time, it has soared more than 25% without even taking 2 months. So, in May, people sold stocks and left the United States stock market, thinking there would be a correction. But those who didn't follow this trend made the right choice. You can see it this way. The reason why the United States stock market soared so much last month is because Chairman Jerome Powell of the Federal Reserve made some very dovish remarks. But tariffs weren't the only reason for the stock market's rise. According to LPL Financial's analysis, in this earnings season, companies' actual earnings have increased by as much as 13% compared to last year on average. And also, 78% of companies exceeded earnings expectations, and most companies expressed concerns and caution about tariffs and increased consumer spending, but their outlooks were generally positive. Especially, megatech companies were expected to show relatively good performance growth. Therefore, the rise in the Nasdaq index could be attributed to different factors. 2 main reasons for this exist. First, worries about the Trump administration have lessened. Second, the actual performance of the companies was just too good. Especially the tech stocks that we favor showed remarkable results, which allowed us to achieve the highest returns in May. That's how you should look at it. Now, from here on, let's think about whether this upward trend can continue. This is just my personal opinion. The United States stock market's future hinges on 2 key factors. First, it depends on how the outlook for the tech sector will turn out. The tech sector is the most important, and it determines the sentiment of the market. Second, it also depends on the actual earnings of the companies. Now, I'd like to explain the third factor, which is information. Information has not been circulating as much recently. The reason why we are so focused on the Trump tariffs is because ultimately the reason we are paying so much attention to the Trump tariffs is directly related to inflation. In the article above, Park Rae-yeon emphasized one important fact. On the last business day, PC demand for April was announced and the numbers were disappointing, with growth lower than expected, reflecting the current trend. Notably, the PC price index appeared favorable due to base effects, a point being highlighted. Last year, in April 2024, the PC price index rose sharply. So when compared to that, this year's April numbers naturally appear lower. That's why it's being pointed out that the lower numbers this year are due to the base effect. So, looking at it historically, for the month of May as well, the base effect comes into play when comparing with last year's relatively high numbers. Therefore, if the monthly inflation, which has been relatively low, starts to rise again, the year-on-year growth rate could go up again. In other words, until now, inflation has been steadily slowing down, but starting from May, inflation could start to rise again. If that happens, depending on market sentiment, there's a high possibility that people will interpret it as inflation accelerating again when it comes to market issues. Therefore, it is necessary to keep an eye on one of the risk factors. Therefore, in this market, it is important for our investors to recognize and acknowledge the potential risks of such a market. Therefore, even in the case of hedging, you need to be prepared. Hedging is something that can temporarily reduce the impact of inflation, and it can also temporarily boost the economy. So, you need to keep these things in mind. The important principle is that you should never neglect the commodity and stock markets. We don't know exactly how many people returned in May. Now let's focus on the important parts here. Each investor needs to keep the cash ratio they have set for themselves. Right now, there are still a lot of investment risks. And as I said before, in the past 2 months, right at the beginning of April, the United States stock market suddenly dropped sharply. I told you it was going to go up. So, since the uncertainty has been lifted, the market is now more likely to go up, but at the same time, there is also a possibility that it could go down. That's why it's a good time to go either way, and I personally think that creating this kind of portfolio which can benefit from both directions is the most important thing right now. The next prepared articles are about strategy and Bitcoin. Last week, Bitcoin's performance was not as good as stocks, but in May alone, it rose by about 10%. Next, let's read together the articles about Bitcoin and the future of strategy related to Bitcoin. Do you know that the total market value of strategy has exceeded $80 billion thanks to Bitcoin's asset management? Now, the stock industry, this is like playing a game. Media companies, even in various large industries, are being imitated. Strategy has become crucial, leading many companies to follow this trend. Looking at it from this perspective reveals its significance. Last week, Tim Ferriss announced that he would sell Bitcoin worth $2.5 billion, and GameStop said it plans to sell Bitcoin worth $500 million. Hampion Tether and SoftBank's Stripe's Jack Mellors have jointly announced that 21 leading Bitcoin-related companies plan to issue more than 42,000 Bitcoins in the form of reserves. This is the third time this has happened in the global industry. Now, more and more companies have started including Bitcoin in their financial statements. In the past, people invested in stocks, if not cash, but now they're also holding Bitcoin. That's how you should view it. But currently, the market is still at a stage where none of these companies are considered the second MicroStrategy. To put it simply, when you hear that a company has bought Bitcoin, the stock price of that company usually goes up. For example, after the announcement, the stock price of Trimble Media dropped by more than 20%, and GameStop also fell by about 17%. On the other hand, MicroStrategy owns more than 600,000 Bitcoins, and after the end of 2022, its stock price has risen more than 26 times. That's amazing. I've heard that name more than twice, really. The market wanted them to buy even more Bitcoin. Well, that's a bit surprising, isn't it? Michael Saylor, the Chief Executive Officer of Strategy, made this statement at the Bitcoin 2025 conference. It's Michael Saylor. He's a very strategic visionary. He always looks far ahead. Looking back, that's how it always goes. If you look at it in the long term, putting Bitcoin on the company's balance sheet is gaining popularity as a global trend. More and more companies are expected to do this. Michael Saylor described the move as a bold and fair decision, expressing his admiration for Tim Cook's leadership. He said that the bold announcement is spreading globally and that this is a paradigm shift in corporate finance. By participating in this conference, I was able to hear that Hong Kong is preparing to establish a Bitcoin financial company, and that there is also a project underway in Korea. I also heard that there are ongoing projects in Abu Dhabi, and that there is a lot of interest in Bitcoin finance in the Middle East, and even in the United Kingdom. Right now, interest in Bitcoin is growing explosively. Various companies and institutions around the world have started investing in Bitcoin. Therefore, an enormous amount of supply will be poured in, and this is why we can look forward to it. Originally seen as a challenge to mainstream finance, crypto is now being legitimized as an asset class by global institutions. You and I are both investing in order to collect Bitcoin. That's why we're doing this. While only El Salvador has officially adopted it, companies worldwide are accumulating Bitcoin, which has become a symbol of national sovereignty. That's why the Securities and Exchange Commission didn't look favorably on companies accumulating Bitcoin. But after President Trump took office, the situation completely changed. Last March, President Trump made it clear in an executive order to install a nationwide Bitcoin payment network in the United States, and regulatory agencies were instructed to allow companies to acquire and hold Bitcoin as long-term assets. This reserve is expected to be funded by Bitcoin, which has been secured through confiscation and civil forfeiture. And cybersecurity artificial intelligence expert David Songs made this clear. He also added that the government is considering ways to secure additional Bitcoin without increasing the budget in a mid to long-term manner. And this new executive order clearly states that the Bitcoin held in the Treasury cannot be arbitrarily sold. That way they can prevent the price of Bitcoin from dropping too much. President J.D. Vance also issued an executive order last week as acting president, banning the direct connection of Bitcoin to the community and prohibiting the disclosure of information about undisclosed related matters as a preventive measure. Former President No Dongbu also stressed the importance of including Bitcoin in retirement pension investments. So now, the government is showing actions that support Bitcoin, and that's how it looks. However, despite this, there are still some sectors in the industry that are reluctant to accept Bitcoin. Last year, Michael Saylor's statements were that some companies are using their cash reserves to follow the trend of global adoption. This was also a hot topic in the financial world. If Microsoft's shareholders had approved investing in Bitcoin, it would have increased the likelihood that other companies would follow suit. But since it was rejected, Microsoft currently does not hold any Bitcoin on its balance sheet. However, the possibility of similar moves being made by other major companies is something we can still look forward to in the future. Is it Michael Saylor? He explained that the stock prices of Trimble, Media, and GameStop are moving in anticipation of the market due to capital inflow and demand structure, rather than being directly related to a Bitcoin meeting. What this means is that, in the end, companies need capital to buy Bitcoin. There are two ways. One is to sell assets, and the other is to issue additional stocks. But in the market, such news is not always welcomed. He is the one who first announced that he would buy Bitcoin for the company's reserves, and at that time the stock price soared by 50% and the trading volume increased tenfold, which he enjoyed. After that, the company announced the conversion of $1.5 billion in reserves, which was a very successful way to raise funds. This is how it was evaluated. Trimble Media also announced a plan to buy Bitcoin by issuing large-scale convertible bonds. Now let me explain. This kind of fundraising method can temporarily boost the company's stock price. Because when more shares are issued additionally, the stock price can fall in the short term, but in the long run, that's not necessarily the case. Investors consider this. Investing in Bitcoin can increase the company's value in the long term. That's the ultimate outcome when viewing it from a long-term perspective. Regarding strategy, there is no limit to the Bitcoin purchase plan. Our company already holds a lot of Bitcoin in a stable way, and we will continue to buy more in the future. We expect the price of Bitcoin to keep rising. As the price of Bitcoin rises, it becomes increasingly difficult to buy. That's why Saylor said that it is important to keep buying in a more efficient and systematic way. Michael Saylor. Also, as more participants and more entities join this ecosystem, the Bitcoin ecosystem, the protocol becomes more and more diverse and decentralized. As a result, it becomes harder to destroy and stronger. Therefore, this means that the Bitcoin ecosystem becomes stronger. Just like that, economic entities that couldn't invest in the traditional financial system due to instability can now trust the Bitcoin network and manage their assets safely. So, let's wrap it up. Now, I'll try to wrap things up with my own thoughts. I've been saying this repeatedly from before. The sole reason I invest in Bitcoin, cryptocurrency, or related strategic investments is singular. I don't know much about Bitcoin, but there is one fact that I do know. The price of all goods and services in the world is determined by the law of supply and demand. This is an undeniable truth. Now, in this context, there are more institutions and companies investing in Bitcoin. Therefore, this kind of trend can ultimately make Bitcoin more accessible, and as the supply and demand laws work, it can have a positive impact on the price of Bitcoin. This is what I'm expecting. Especially if institutional investors start investing on a large scale, it can attract additional demand because it can stimulate the investment psychology of other industries or individual investors. Now, let's move on to the entrance of the physical investor. The volatility of the cryptocurrency market itself is something we have to keep in mind. So, going forward, will the short-term price rally of Bitcoin continue? Overall, due to structural changes in the market, various macroeconomic factors, and the combined influence of different elements, we can expect to see continued ups and downs. Thinking this way is reasonable. But what about the long-term story of Bitcoin? Due to its limited supply by design, Bitcoin is provided in a fixed amount, and as more investors and institutions join in, its potential for sustained value growth increases significantly. Therefore, we need to think simply. The price of Bitcoin, you see, ultimately, as demand increases and supply decreases, the price is bound to go up. This is a clear and simple way to look at it. Today's final selected content is today's United States stock market video. If you look at Sion Jisu's original assets, you'll see they're quite substantial. The S&P 500 is down 0.58%, and the Nasdaq is down 0.69%. So the atmosphere on the first trading day of June isn't looking very good. So the market started off on a weak note, and the mood is a bit down. In this video, we'll have Tani, the top options trader at Volga, directly check the current sentiment in the United States stock market so you can see for yourself how things are going. That concludes today's broadcast, the first United States stock news of June. Thank you for watching with Yusul Sayer. I'll do my best tomorrow to deliver helpful content to many people without relying on artificial intelligence. I'll prepare carefully and see you again. Thanks. Let's all keep fighting together until the day we retire as United States stock investors. Have a happy day. Thank you.
Today's video is brought to you by Goldman's advisor, Tony. Tom, are you paying close attention to how investors will choose their path in this situation? Or do you think that at this stage, tariffs alone are not enough to cause a significant change in the market's rally?
Both perspectives are valid. In the short term, tariff concerns are growing. Now, the judiciary has begun to make judgments based on what conditions are possible, and responses from the business community are also being created at the same time. However, I think there are still legal avenues that can be pursued through tariffs. So if we look at this realistically, I believe it will take a few more months before this is resolved, and I am cautiously optimistic that a solution will be reached. The fact that different countries are coming together to discuss conditions that can be accepted and the boundaries of what the White House is aiming for is narrowing. So I think this means we are getting closer to a final agreement. So I see this as a temporary factor in the stock market, and I understand that the market is reacting sensitively to it. But from my perspective, if you look at the current risk-reward ratio of stocks, it's actually better now than it was back in February 2025 when the S&P hit its previous high.
I'm curious to know how you view the current downturn. After the actual announcement, NVIDIA, which had soared to the sky, is now being adjusted to a more realistic level. Do you see this as a time to re-enter that sector, or do you think the rally will continue for a while?
I think the market is currently in a phase where concerns about interest rates and related issues are ending, and there is strong momentum and a cyclical rally that could continue for a while. So I expect sectors like industrials, financials, especially technology, and even mega-cap stocks that have recently adjusted to lead the rally. I also think small-cap stocks will be included, Until now, small-cap stocks have been under pressure due to economic uncertainty, so if confidence is restored, they are likely to rebound significantly. And if we look at 2026 by that time, the normalization of interest rates is likely to be more complete than it is now, so this will be a positive factor for risky assets.
The situation is a combination of several factors. Most analysts are referring to the Thomson and FactSet reports, but each interpretation is different. Various comments are emerging this morning. Barclays says it's not certain whether this situation will lead to a sustained overall risk. It's about the process of settlement, legal handling, and then the impact that could be indirectly transmitted to the financial market. The key point is that tariffs can affect future tax reform directions, and they can also impact the stock market again. Even if tariff revenues temporarily increase, unless Washington fundamentally changes its tax policy, it won't have a lasting impact on the stock market.
This interpretation is also being raised as a possible scenario by some cautious experts. Although there has been an upward trend in recent weeks, major Wall Street economists have remained cautious about this rally. If you look at the actual prime brokerage data, the total position is high, but the net position is low, which means hedge funds are still cautious about buying into this rally. There's still a lot of cash on the sidelines. Investors are looking for opportunities to enter the market when it goes down. It's the same logic as Michael Burry's analysis. Previously, they didn't want high interest rates, but now, if interest rates go down, it's a sign that the economy might be in trouble. The economy is like a living organism, constantly moving forward and backward. But if the tariff issue is resolved, it won't have a direct positive impact on the stock market, and if companies face a tough environment, we should expect that the multiples will have to come down next year.
Thank you.